Hello and welcome. This is Business Edge right here on News Central. I am Joe Hanson. First, the headlines. Nigeria's second recession in 5 years and last MPC of 2020. We'll go for a quick break, and when we come back, we'll bring to you the stories. Welcome back to Business Edge, and now time for us to take a look at the stories. Nigeria's second recession in 5 years and last MPC of 2020 makes it to the stories today. The Nigerian economy is in its second recession in 5 years as the gross domestic product contracted for the second consecutive quarter. The National Bureau of Statistics announced over the weekend that the nation's GDP recorded a negative growth of 3.62% in the third quarter of 2020. The country had earlier recorded a 6.10% contraction in the second quarter. It is the nation's second recession since 2016 and the worst economic decline in almost 4 decades. The Nigerian economy has been battered by the coronavirus pandemic, which caused a significant decline in oil revenues as global economic activity stalled for months. Crude oil accounts for nearly 90% of Nigeria's foreign exchange earnings, although it contributes less than 10% to the GDP. It contributed just 8.73% to the economy in the latest report. The pandemic and border closure have pushed Nigeria's inflation for more than 2 years, with the October figure of 14.25%, the highest in the last 30 months. The Central Bank of Nigeria in September cut interest rates to 11.5% to help boost borrowing and support the economy. It was the second reduction in months. This development is likely to trigger a further cut of the policy rate. The Monetary Policy Committee will end its 2-day meeting today. And back to the studio. Joining us to discuss the situation that Nigeria is facing currently, we do have financial analyst, co-founder of Awaba Nigeria, Tunji Andrews, is here to join us. And we also have another financial analyst, Janet Ogunkoya, and they are here to break it down. Welcome to the show, Janet, and welcome to the show, Tunji. Thank you for joining us.
Thank you for having me.
All right, so Tunji, I'm going to ask this question quickly.
Thank you.
Thank you for joining us. Thank you. A number of analysts predicted Nigeria's recession. Could the government have done anything to prevent this from happening? I'm going to start first with Janet.
Yeah, hello, Jonathan. Thanks again for having me. So I would say, the coronavirus pandemic that hit was quite, it hit quite the global economy, and it took everybody by surprise. So it's hard to really point that or to, state plainly that there was anything governments could have done to avoid the recession. It's not far-fetched to say that. Before the recession hit or before coronavirus hit, Nigeria's economy was growing at a very relatively slow pace. So it was more or less like we hadn't fully recovered from the recession back in 2016, 2017. But the coronavirus was quite a surprise to global economies, and I would say there's very little the government could have done to avoid it because of the necessary measures that we're taking, like the lockdown measures that we're taking. And the likes. But I would say that, we're showing some recovery from the recession, at least in Q2, even though from the contraction in Q2, there's been an improvement. Although we're still in contraction, it's at a slower pace now than it was in Q2. So progress, more or less, yeah.
Thank you very much, Janet. Tunji, I know you mentioned this a few months back and you talked about recession just very closer. What do you have to say to this as well?
It was always a matter of when, not if, as concerns the recession with Nigeria. I do know that earlier in the year, the finance minister, in conversations with the National Bureau of Statistics and some sort of pseudo-economic council, had been looking at the possibility of trying to reduce the effects of the recession on Nigeria. Even the VP, I think the VP was the head of that coalition. So it was a case of how bad can the recession be, not a case of whether we would escape it or not. However, I am of the opinion that we could have averted the recession. I had been saying it since about a year ago that we were heading for a recession. If we had planned and not put our heads in the sand like ostriches, we probably might have started the plans to avert the recession a year ago. But the good thing is that it looks like we will not be here for long, and we will be out of it maybe in the next 2 quarters.
All right. Okay, so Nigeria's government predicts that the recession will end by first quarter of 2021. Is this a possibility given oil price fall and less demand from the international community? Janet, what do you say to this?
Well, I would say it's likely, and the reason for that would just be, looking at it technically, we had our first contraction in Q2. So, by the time you're doing the year-on-year analysis in terms of growth, Q2 would be a low base that would just favor, having, a positive growth by Q2 in 2021. So technically it's possible, and logically, it could, you would think of it like, it's quite possible. But looking at it from fundamentals and looking at it from a fundamental standpoint, I mean, with the whole vaccine coming on board, we're seeing some recovery in oil prices. So it actually, increases optimism for, perhaps we could see global economies open up more. We could see global economic activities improve. So we'll see that, feed through positively to oil prices. And then, I mean, obviously, considering our reliance and the extent of reliance that we have on crude oil, right, we could see that definitely, perhaps give a little bit of support to our reserves and then also boost economic activities here as well. But I would also mention, like I said, we've had quite some recovery. I mean, when you look at the GDP numbers that came through, it puts out that quarter-on-quarter Q2, we actually had a growth of about 12%. So it's just showing that there's some strong recovery, in terms of, looking at it from fundamental level and in terms of economic activity here in Nigeria, there's been quite a strong comeback, among economically speaking, on local or domestically speaking, more or less. So yeah, we've had quite a strong recovery, and then so in terms of fundamentals or in terms of just technical calculations, we could see that definitely, feed through the numbers by Q1 or Q2. Yeah. Interesting.
All right. Some trade partners, such as the UK, are making new trade alliance. Could such deals help in boosting Nigeria's recovery, Tunji?
Sorry, say that again.
All right. I said some trade partners, such as the UK, they're making a new trade alliance. Could such deals help in boosting Nigeria's recovery?
Yes and no. So deals like that, anything you see, any economic activity that is happening in the now usually takes a while for it to have effect on the economy as a whole. So it will take a little while before the effects actually hits the markets or the streets. My thought would be, the only thing that is going to get us out of the recession is crude oil prices. Once crude oil prices rebound strongly, we will get out of the recession, and it has started to rebound. And that is why you see that the numbers for Q3, were not as bad as expected. Even if we have those alliances, we would start to see the effects maybe in Q2 next year, but I don't think it's something we should look at as exit from the recession.
Interesting. I'm going to have to ask our financial analyst to please stay with us as we go for a break. When we come back, we'll look at more questions and insights concerning this. Welcome back to Business Edge. Still with me on Business Edge today are financial analysts Janet Ogunkoya and Tunji Andrew. So I have been asking them a few questions concerning Nigeria's recession. Now, what are your predictions from the Central Bank's Monetary Policy Committee on rates? Let's look at that very closely. Let me start with you, Janet.
Okay, yes. So for the policy meeting today, I'd say if we had to make a call would be, and then even consensus expectations is that, the central bank has just hold rates. I mean, we don't see a change in policy decision at the meeting today. And I mean, looking at it, the argument for that would be perhaps they would just wait to, because, we had the last meeting, or we had the interest rate cut at the last meeting, and, central bank will probably want to just wait to see how that effect pans out rather than taking any further cuts. And on the opposite side, it's trying to see the argument for an increase. I mean, when you look at, the fundamentals that we have going on, you look at rising inflation and you see, the extent of FX issues that we have, ideally you would probably expect that central banks should, perhaps raise rates, to perhaps, reduce, to kind of reduce, to keep, to reduce the hit in the economy, or, to reduce the, to control inflation basically, or to control the FX part of things. For the intricacies with the concerns that we have going on, considering inflation is more or less is more of a structural issue rather than a demand side issue. So what that means is, the factors driving increase in inflation so far has not been, perhaps the amount of money in circulation, rather it's just been structural issues that we have going on, like the border closure, the FX, the devaluation in the naira, all of that is putting pressure and, causing increase in prices. So, increasing rates will not exactly be effective to curb inflation at this moment. Same thing with the FX side of things, in as much as we're having devaluation issues, I mean, the CBN would currently be slightly comfortable with where we are with our reserves at $5 billion. So in as much as perhaps a few months down the road, we could probably see a scenario where, the CBN gets uncomfortable or wants to try and appease foreign investors by increasing rates. I would say at this moment, they are a bit comfortable, with current level of reserves. And when you even just track the OMO rates that we've seen, because, the OMO market, the OMO primary market is currently exclusive to foreign investors. And what we're seeing with the CBN from that end is they've been cutting the rates, like the interest rates that CBN has offered the foreign portfolio investors have been dropping recently. So it doesn't look like the stance of the CBN right now is to try and appease, foreign portfolio investors. So looking at it from both ends, you would say it's possible we just see the central bank hold rates today and leave interest rates unchanged. Interesting
breakdown from you, Janet. Tunji, do you seem to have another angle to this? Looking at the fact that Janet has been able to also help us see some points on that.
I would say that I don't envy the MPC. They have multiple things to look at. They have multiple considerations. We have you almost want to call it a quadruple whammy. There's rising inflation, there's rising unemployment, and there's of course a recession. Usually in a recession, what you want to do is cut interest rates to be able to create liquidity so that the market is able to have some liquidity. But also that if you do that, there is a adverse effect on inflation. And then there's the issue around jobs and things like that. So I do not expect the CBN to move significantly in terms of exchange rates. I think what we will be hearing are announcements of interventions. I think, and honestly, this is the way this particular CBN works. They do a lot of intervention. So we're going to possibly be hearing about a 200 billion being put into this, a 500 billion being put into that. That is what I expect to hear from the CBN today, because to be honest, they do not have a lot of options.
All right, let's look at the value of bonds. The value of bonds and treasury bill dropped to as little as 0.5%. This led to more stocks being bought. Does this have any benefit for Nigeria and Nigerians? Let me go with Tunji first before I go back to Janet.
I don't know if the government is really serious about anybody putting their money in the debt market right now. It's if you want to look at the inflation rate, 14%, then you're talking about anything under 10% for the bond market is highly unrealistic to think people will flock to the market, even though there isn't a lot of options in terms of investments in the market. Normally you would expect that this would happen in a high trust market, a market where you know that if you put your money into it, there is a significant trust in terms of keeping value. But we do know that there is possibility of another devaluation because there's still pressure on the naira. So I don't know who is putting their money into the bond market at this particular time. I don't think it is wise. I don't think it is sustainable, especially if you want to look at everything happening with the Nigerian economy. And if you want to look at history, we did see a major devaluation almost to the end of the last recession. There is chances that we will see another one in this particular recession. So putting your money into the bond market and getting, I don't know, 5, 6, 7, 3% is almost criminal. It's almost criminal.
All right. Janet, do you have a different perspective to this?
Well, I would also agree with Tunji in the sense of, coming from the angle that he started with, that the CBN doesn't really seem to be bothered about, what you're getting in terms of return on treasury bills or bonds or whatnot. But a perspective to it would be, you saw the strong rally we saw on the NSE on November 12th, where the circuit breaker was triggered. So we're kind of seeing people, move towards other alternative instruments, especially with the extent of, all of this was caused in October 2019 after CBN came up with the rule that, domestic investors limited, the extent of participation by domestic investors in normal markets. So we're kind of seeing a diversion where investors are looking at alternative markets. Is there any benefit for Nigeria? I would say, just looking at it from a social or a macro level would be the lower interest rate is definitely good for businesses. Hopefully we're seeing this, we see this with recent data perhaps, we see this trickle down to banks having to issue less interest rates for, in terms of issuing loans, or, to perhaps small businesses, or because with this decline or this lower interest rate, perhaps we could see this trickle down, with a lower interest rate environment. Ideally, you'd expect that, banks, that the DMBs will be able to issue loans at lower rates to businesses, that goes in the real sector. So I would say the winners of this would have to be the real sector, those that, are involved in businesses. But other than that, we're just seeing a case of, for investors particularly, it's definitely not beneficial. And then we're seeing a case where, investors are moving to alternatives in terms of, going into equity markets. And that could, in a way, because we're not having foreign investors in the equities, it's kind of also helpful to have to increase the depth of our equities market and increase the level of activities there. We've seen scenarios where even the pension fund administrators that would usually not touch equities are the ones now investing in equities ideally as it should have been. So those are kind of like, that's almost like trying to look for, the ray of sunshine in all of this, in this low interest environment. So I would say those are the benefits that you see. You're having, you're having a deeper financial market, a diversion into, equities, and then also real sectors should be benefiting from lower interest rates in terms of cost of loans and cost of borrowing.
All right, it's interesting. I wish we could go on and on and on. I want to sincerely say a very big thank you to you, Janet, for joining us. Thank you very much, Tunji Andrews, as well, for taking time out to honor our invitation to be here on the program Business Edge. Thank you so much.
Thank you for having me.
Thank you for having me. Have a great one.
Thank you. All right, so you heard from the analyst right there. But it's time for us to move on to NC for Watch. And we will begin with South Africa's unemployment insurance fund could collapse if COVID-19 payments are extended. South Africa's Employment and Labour Minister Thulas Nxesi has warned that the state-run unemployment insurance fund could collapse. He explained that such reality is unavoidable if it is forced to further extend special benefits to workers who've lost their income as a result of the coronavirus pandemic. The government initially committed 40 billion rand, that's approximately $2.6 billion from the fund, which is financed using workers' monthly contributions to subsidize the special benefits for 3 months. And almost 53 billion rand has been dispensed to more than 4.7 million people so far. Let's take a look at the next. Morocco's annual inflation rate reaches 1.3%. Morocco's annual inflation rate is 1.3% in October, according to the country's High Commission for Planning, HCP. The inflation rate increased due to a 2.7% rise in the consumer price index of foodstuff in Morocco and a 0.3% growth in the CPI of non-food products. The evolution of prices for the latter varied from a 1.2% decline for entertainment and culture and a 1.8% rise for education. Meanwhile, Morocco's monthly inflation stood at 0.1% between September and October. The figure resulted from a 0.1% increase in the CPI of foodstuff and the stagnation of non-food products prices. Pre-seed funding round, Nigerian startup AutoCheck secures $3.4 million. Nigerian automotive technology company AutoCheck has raised $3.4 million pre-seed funding for expansion of operations and platform development. This round was co-led by TLCom Capital and 4DX Ventures, with other investors including Golden Palm Investments, Lateral Capital, Keppel Africa Ventures, MSA Capital. AutoCheck has operations in Nigeria and Ghana, where it is creating a safe and seamless automotive commerce experience for users. The firm's platform is a network consisting of consumers and businesses to buy, sell, service, and also finance cars. Tea auction records a slight price increase, makes it at number 4, hits $1.92 per kilogram. The weekly Mombasa tea auction held across 3 days on the 16th, 17th, and 18th November 2020. The tea auction recorded a slight increase in prices, with a kilogram selling at an average price of $1.92 compared to $1.90 during the previous sale held on 2nd and 3rd November 2020. And that does it for NC Watch. I want to say it has been a good show. Thanks to our guest analysts for joining in, and thanks for also staying with me for more business stories. Don't forget to follow us on all our socials, and also don't forget the website www.newscentral.africa. I am Joe Hanson. Many thanks for watching.